For folks who might not be aware of it, the acronym stands for London Interbank Offered Rate. It's a key benchmark rate, and it serves two purposes, largely known as a benchmark rate by which pretty much most financial instruments, especially those of the lending nature, whether they're student loans to credit cards to personal loans to commercial loans, are used. It's also used as the reference rate by which banks use to borrow money from each other. It's in the process of being phased out with a timetable at the end of 2021. So the time is quickly approaching. So
okay. So maybe just explain a little bit more. Why is LIBOR going away? What's all the fuss about it that's really creating this this stir in the market, if you will?
Well, over the past 3 to 5 years, regulators in the U.S. and in Europe have determined that LIBOR is an imperfect rate for a few different reasons. So people are seeking an alternative rate to put in place, and because this rate is used in so many different financial products, it just became imperative to make a change. So it's a incredibly large problem. In addition to the aggressive time frame that the regulators are pushing along to make the change, which it creates a time crunch problem, this reference rate is used in a lot of contract language. And because it impacts not only lenders but also borrowers, so it's a twofold impact. Digital workers can play a role initially when everybody feels comfortable in grabbing all those documents, reaching out to the repository or repositories collecting those documents. The results of the AI, the digital worker, could have algorithms built in, RPA platforms such as Prism. You can put logic within there, like a logic that a human has. And we see in the news, especially now since the beginning of the year, more and more regulatory pressure starting to arise. We expect to see more of that. And what's interesting about LIBOR versus other regulatory actions, it's more of a change in the way of how people are doing business versus the government mandating the law. So you do need a little bit of flexibility, which AI models, as well as the models and logic you build into RPA platforms and similar automation platforms, to make changes, because the final outcome of LIBOR is still a little bit of a moving target.